Hey traders, this is Travis from ProfitbullPro with another 52-week review. We're on week 42. It's been 10 weeks and it's still the whole year. We're in March. Like now doing these 52 weeks really put the concept of time in my head. Like it's mind-blowing. Like we're in March, mid-March at that, towards the tail end, and we still have 42 weeks left of the year. It's crazy. Update on the trading account. We are up for 13% up for the year. A lot of people may say, "Oh, but when you're starting off with a small account, and by the end of the year, you'll see." I'm gonna post everything up, and you'll see the documents. It'll be proof. But at this point, these videos are here to be my journal. I'm talking about future predictions. Sometimes I'm talking about current profit. So each week, I'm going to give you a different perspective of the 52 weeks and how the weeks are going. But on this week, we're going to be talking about the major three pairs: dollar index, which we have the DAX up, and what happened in the economy last week. We also will be talking about the pound, as well as the euro. I didn't want to really get into too much Aussie, New Zealand dollars, JPY, CAD, or Switzerland franc, and the reason would be is that everything else is building up towards these three major currency pairs. If the US dollar falls, then we'll have the emerging markets like Switzerland franc, or aka the safe havens like Switzerland franc and the Japanese yen. Excuse me, I had a burp. The Japanese yen pushing up northward with bullish momentum. If we have the reverse, we'll see New Zealand dollar and Aussie push up with a weaker euro and weaker pound, which I see a situation different from the pound being weak. But we don't know, we don't know. This is all speculation. And that's what trading's about, is being speculative, but having better risk ratios and money management skills. And your trading psychology has to be keen. I mean keen to be a successful trader. It's not about giraffes and hippopotamus patterns. Like at the end of the day, is understanding fundamentals, money supply, or basic microeconomics, and getting into the right price. Yeah, you're gonna lose some, but you're gonna win more than you lose, and that's the main goal. Warren Buffett likes to say, rule one is uh, don't lose money. Rule two is follow rule one, and then rule three is follow the other two rules. And I believe that, as a trader, you don't want to lose money, but it's gonna happen. But don't let those losers tear you down. I think as a trader, I like to watch golf now. I wasn't really into it as a kid, but um, each stroke is a new opportunity, and each trade should be treated like a new opportunity. Didn't mean to preach to you guys about mindset, but it's just something I wanted to bring up. Maybe I'll double down on that in other webinars or talks. But yeah, so yeah, we're going to talk about the dollar index. So right here, what we have is the DAX, and the week for the US dollar was way different. I know in the beginning of the week, right there on the 11th, and I'll highlight that zone right here. Get my little highlight too. We got some news. Change that color. I don't like that. Wow. Make it that blue. I like that. That's the Bloomsburg blue. Like that. Can we make that a little thicker? Yeah. Perfect. So yeah, U.S. retail sales business investor news wasn't really bad actually. It actually gave it a positive push up, right there on the 11th. We're a little right on this ISN. There we go. Right there. And gave us a nice push up to the upside, which was nice. Oh, ladies and gentlemen, I apologize. Wasn't there? Yeah. That was. I apologize. That was the U.S. Consumer Price Index, which gave that push. We have to go a little further back. There we go. That's what we're talking about right here. The U.S. retail sales business investors was right there. Um, wasn't big news. Didn't push it further. But the U.S. Consumer Price Index was really important that day. But then what brought the U.S. dollar weaker was going to be the U.S. goods consuming spread. And I'll show some articles breaking these news reports down. And you know what? I'll get into it right now. So right here we have Market Watch. The U.S. retail sales rebounded slightly in January, month after big decline for the 10-year. So basically, to put this in layman terms, consumers are not spending money at all, not like they used to, and that is a big sign of, hey, a weaker dollar in a currency, or just a weak economy in a country. If your consumers are not spending money, what are they doing with their money? Interest rates, they're good for other countries and businesses, but for the consumer, they're not investing their money. They're spending money. I don't know if anyone in this community is watching credit card or debts, but debts are growing higher and higher. And the reason why they're growing because each 6 months to a year, they're putting those claims up. So there's really more. The consumers are now more in debt that they're swimming in it. They're not spending up. They're slowing down. And also, I think it's because of the interest rates. They're not at the point where consumers will feel comfortable about their money. So psychology wise, of the economy is just not there for the market to be pushing forward for the U.S. dollar. So this coming week, if we pull back the DXY, I do see a weaker dollar long term for the end of this month towards mid-April. And if we pull this up on a weekly, on the Ichimoku, we slowly have this double top creating, and we just got out the Ichimoku cloud. If this week we can close below this conversion blue line back into the cloud, I will be trading this further as a bear as we get closer to these trade deals. As long as that trade deal comes up with positive news, everything else that comes out, NFP, doesn't matter. Going to be continue being bearish. Also, another report, like I said earlier, was the U.S. producing price. Like I said earlier in the week, it just brought the U.S. dollar down. It really, the goods, they're not there. Like, no one's spending money. And that's what really brought the U.S. dollar down. No tweets from Trump, nothing of that sort. It's really playing the major factor. I know regarding Canada with OPEC, that's affecting them. Also with the text from Trump. But for our economy for the last week, that wasn't the big play. I know if you saw week 43, I spoke about, hey, getting ready to short the U.S. dollar for multiple reasons. If we look at our strength index, it's slowly becoming one of those currencies. We have Switzerland franc on top, JPY. Watch these videos. I'm telling you, ladies and gentlemen, I'm not crazy. It's just how the cycle, not psychic or psycho, the psychic. I apologize. The cycle of the market moves, and when you understand how money works in this economy, you just have to be patient like a fisher in a lake and wait for that bait to get taken. With that being said, I do see US dollar becoming very weak within the mid-month of April. So that's that. Let's get into Great British Pound USD. Oh, before we get into that, US dollar. Talk about all the currency pairs against it. How did it hold up on its own? So, US dollar. Boy, oh boy. I tell you. Not my dollar. Haha. Notes. Gotta love them. Boy. Is there a better way of doing this? There we go. Perfect. So, know I should pass this right now, but I'm not going to do that because I'm determined to find these notes. There we go. Sorry about that, ladies and gentlemen. Got to get a little organized with these notes on this iPhone thing. Got to get a little comfortable with them. Anyway, so US dollar. All right, so Great British Pound, US dollar. All right, so Great British Pound took a loss. I apologize. Great British Pound won against the US dollar. 279 pips, open to close. That was a 2.14% gain for the Great British Pound against the US dollar. The US dollar only beat out Japanese yen, which this week is going to be the total opposite. I said it first here, Monday, March 18th. Yeah, this week, US dollar's losing to the JPY. If you don't know, get on those trades now and short that sucker. Second, obviously the euro beat out the US dollar, New Zealand dollar, US dollar. Across the board, US dollar got beat out so much that it just was disgusting. It was a bloodbath. Other news regarding the US dollar, just keep an eye on the trade deals. Fundamental news that we got coming up the week of the 18th to the 22nd. This is now this week. So for US dollar, I don't think we have anything major except FOMC. That's going to be at 2 p.m. Wednesday. And yeah, it's going to be a quiet week. Yeah. When we get to that last week of the month, we'll have, non-farm, payroll, rinse and repeat. So this is going to be a good week to, short that US dollar. So just saying. So let's get into the poundy pound, pound cake. Great British Pound, USD. All right. So the pound, what a great pair this was last week. Let's take a journey, ladies and gentlemen. So the big push. All right, so we started off this week looking pretty decent. Me personally, I thought we was gonna be bullish on the euro, the Great British Pound, and it had me whipsaw. I didn't see the flag pattern. Didn't see it. I'm not gonna lie. Didn't see the flag pattern. What we had here. It caught me off guard, and it's only because of this fundamental news that came, which was UK Attorney General Cox speaking on backstopping the union, the backstop / the consumer union, which I have a report here. So like there was no deal on Brexit, which doubled down, pushing it further down that week. Theresa May, you know, the divorce. Everybody knows it's Brexit. It's still trade deals. It's basically still trade deals. Like China, it's the China's really got everybody in this tailwind. The big trio basically, because whatever happens here is affecting the euro, because they're trying to break up the EU. So like it's all a cycle. China's right there with the ball in their hand, ladies and gentlemen, and it is what it is. So with that being said, all these links will be in the description if you want to read these articles. But basically, that's the main reason why we had this push downward. And then, guess what? If you get the Fibonacci tool, which I love, from the swing high, swing low. Sorry about that. Gotta reverse it, kid. Can't shake them. I'm on this laid back trading and teaching thing right now, so I apologize if anybody's like, yo, your videos are a little different nowadays. What's going on? I'm being human. So, yeah. Market retested off the 86 level. Bounced back, found support at the 618, and then pushed up. After that, it was a rocket, man. And there was no news for that. There was no news that projected that, except the parliament rejected a no deal, which at this point pushed it up here. And then guess what? The market got exhausted, rejected those levels, and then made consolidation for the rest of the week. The cool thing is, if you're trading any Great British Pound pairs, you're gonna have a lot of volatility because of Brexit. Brexit's really gonna be making a lot of people a lot of money during these times, and if you're not trading it, I don't know what to tell you, because you should be trading it. So let's see how well they did against all the other pairs, which I know they did well. It was a top. For the last 2 weeks, they were on top. As we already know, no surprise, Great British Pound JPY was the winner, over 357 pips from week open, week close, with a 2.47% gain. Now, that doesn't count for the whipsaws that we have within this market, but as a whole, from open to close, that's amazing. I know our team at FGM and ProfitbullPro, we got over, I think, as a cumulative for just Great British Pound trades, over 500 pips together. Loved it. And then the third one was, surprisingly, Great British Pound Swiss franc. Wasn't seeing that. That caught me off guard. Over 209 pips, a 1.6% win from open to close week. But yeah, if you really want to see some signals and projections, please join our Telegram group. The link will always be in the description below. We actually finally made it so close to 100. I can't prove it except with screenshots, but we almost hit 100 followers in our Telegram group. We're at right now 87, 88, bouncing back and forth. But I just want to say thank you for all the love and support, ladies and gentlemen. That it's only been 10 weeks. It was at 15 in the beginning of the year, and now we're almost touching 100. We're at 15 subscribers. A lot of people are like, well, why are you so excited about 15 subscribers and almost 100 members in your Telegram group? Well, I remember 4 years ago, it was just me sitting in a room in a cold apartment. So now that I have all this, it's beautiful. I love having the community. I love talking to you traders. Like, I live for this. So I just wanted to say thank you now before it's too late. But let's get into the euro. Da da da. So, news release. Definitely gonna be looking at this. Let's get the chart up. Euro USD. What a great week. What a great week. Look at this trend. Look at this trend. The trend is your friend. Euro. With the Euro step. Perfect. This is beautiful. Just beautiful. So Euro beat out everyone but the Great British Pound. JPY over 139 pips. Lost by the pound by 110 pips. Not a big surprise if you're the big dog like the Great British Pound currently. That's what's gonna happen. When you see Euro beat out the Great British Pound, you know you got some strength in that Euro. It's really rare. I was about to say really raw. It's really rare for you to see the Euro beat out the pound, and if you do, it's gonna be lovely. But I digress. The third winner was naturally the Euro USD, which was 93 pips. Nothing, surprising. This coming up week, we will be having a short against the Euro and the USD, only because I see some weakening between those two. Not against all the other pairs, but just that particular one. Let's get back to the news images. There we go. What I'm doing is like screenshotting this, and if you're in a Telegram group, you'll get access to this information. So the biggest thing was the German trade balance index production, which we have this up here. And hey, this brought it up 1.4% up. Hey, I'll take it. From 2015, just the growth. We had a little dip, last quarter, came back up, but this is how the market moves. If you are a day trader, look at this. Look at that. Look how perfect. It's just finding support. I don't know. But I'm not going to get into all this. If you want to read this, I'll send it. The link's going to be in the description. This is just like the COT report for America, but this is just all the countries that's in the euro. We have Switzerland, Norway, United Kingdom, Sweden. So like, if you don't understand what's going on with Brexit, you're not gonna understand why the euro is affected. You're not gonna understand why the pound is affected. Like, it's crazy. Also, major thing, France. If you're gonna see upswings and like these weird whipsaws in the market on the 15 and 30-minute charts, just be mindful that in France there is a riot going on, which has been going on for the last 11 to 13 weeks. So just be mindful that, hey, sometimes you're gonna see some things. I know Italy's gonna be having some major news coming soon. But yeah, ladies and gentlemen, that's our 52-week review, week 42. If you liked the video, give us a thumbs up. If you didn't like the video, give us a thumbs down. Please leave comments. I want to hear your suggestions. Please, I thank you. I know this is working. Thank you for joining our Telegram group. Please continue. Tell a friend. Help a friend. And join us at FGM. Like I said before, I thank you, ladies and gentlemen. I love you. Keep making pips. Take care.